Their choices basically are that they, in many cases, can leave it in the 401k plan and don't necessarily have to do anything with it. The other choice is that a 401k plan, once you terminate your employment, is what's called a portable plan. So you have the ability to then roll that directly into an IRA.
Hello, investors. Welcome back to another episode of Keeping It Real Estate. I'm Dan Breezy. Today we have a special guest with you, Steve Csobaji, on the show today. Steve has extensive experience in group medical and retirement planning, specializing in self-directed IRAs. So whether you're self-employed or a small business owner, understanding this process can significantly impact your retirement planning. We're going to explore the benefits, steps involved, and the key considerations to ensure a seamless transition, giving you the knowledge to take control of your retirement savings with confidence. With that said, Steve, welcome to the show.
Thanks for having me, Dan. Great to be here.
You bet. We're excited to have you. If you can introduce yourself a little bit, maybe share a little background in retirement planning and kind of how you got to where you are, that'd be great.
Yeah. I've got a very long background, longer than I care to admit. But I've really kind of done a lot in the way of financial services. I started way back at Rowe Price, answering phones and taking requests from retail clients to going on to working with retirement plans and group benefits. Ultimately, all of that led me to work with Quest Trust Company, where it was a nice little pivot in my career. The bulk of my career, I dealt with what you would consider traditional assets, stocks, bonds, mutual funds, ETFs, and retirement planning on that level. But when I got to work with Quest, I got into the area of alternative assets. And let me tell you, that's really a growing area. The pool of what people can use in that traditional space, believe it or not, is relatively small. So for them to really get proper diversification, these alternative assets are the place to be. These are the assets that you don't get through a Schwab or a Fidelity. So this is, I think, really where a lot of people are driving toward to improve upon their financial situation, especially in the last couple of years where we've seen the market so challenging in those traditional asset classes. This is where they're getting the diversification. This is where they're getting something that doesn't correlate to those traditional assets. And that's what's helping people really stay ahead of the game as they are planning for their retirement.
Got it. And what are some examples of some of those alternative assets? What are you referring to exactly?
Yeah, so mostly here at Quest, what we deal in is the realm of real estate as an alternative asset. So again, it's something that you can't go to Charles Schwab and say, I want to buy this house. And literally in your IRA, your self-directed IRA, you can buy a piece of property. I've seen people that are buying a house and using it as an Airbnb or a short-term or long-term rental, anything you can think of. But it also incorporates things like foreclosures, options, wholesaling. It's also in the multifamily space. That usually falls under what we call private entities. And this is a lot of what your clients do. So they're investing through an LLC or a JV or even a trust, and they're going into these alternative assets. And then a lot of what our clients do is also private lending. They act like a hard money lender. It can be secured, it can be unsecured, but it's usually real estate based. And, it then is, something where they can take a lien position to secure themselves on the property. And even some of the things that aren't real estate related would incorporate things like oil and gas, self-storage. I'm even seeing a lot in the way of private company stock. Companies where internally people are getting access to buying shares, but the companies aren't public yet. So they, again, can't do it through Schwab. They can't do it through Fidelity. They need a self-directed IRA.
Got it. So you're saying, if I'm following you correctly, you've got a lot of folks who have their IRAs held with Charles Schwab or Fidelity, and they come to you guys and find a way to be able to use their IRA in a variety of these alternative assets, such as real estate or oil and gas and multifamily and all that stuff.
That's absolutely correct. Again, It's a case of where you just need the right company for the right task. If you want to stay in that space where you're in mutual funds or ETFs, that's where you need Schwab, that's where you need Fidelity. We don't deal in that at all. But if you want those alternative assets, those private assets that, as I say, don't correlate to what traditional assets do and give you that broader diversification, then you need a company like Quest that is a self-directed IRA custodian.
Great information. Maybe you could tell us a little bit about Quest, the company's background and where you guys are headed as well.
Sure. So Quest is a company that's over 20 years old. We still have, our founder, Quincy Long, who is an active part of the company. And Quincy literally wrote the book on self-directed IRAs. He's a brilliant man. Now, Quincy is also now, I'm free to tell you, at a point where he is getting ready to retire. And he has, as part of his vision, always envisioned our company scaling up and then kind of moving beyond him. And so I'm actually really happy to tell everybody here that Quest is about to become a part of a larger company called Inspira Financial. Inspira already has significant participation in the self-directed IRA space. And this is now an exciting opportunity where we're joining them. And now Quest, under this umbrella of Inspira, is going to be one of the largest self-directed IRA custodians out there.
Wow. So is that Inspira, or how do you spell it?
It's Inspira, Inspira.
Got it. So Quest will be under the wing or part of Inspira Financial, and that will be happening sometime this year?
It's going to be happening in the next several months. Correct.
Okay. Well, that's a big congratulations to the owner, and exciting for you guys to be able to have a big corporation, take over and help you guys scale up to another level.
It really is an exciting time here. Yes.
That's awesome. Well, let's dive into some of the common situations for many people. Let's just say, we have folks that transfer jobs and they have to decide what to do with their 401k. What options do they have with that 401k?
Sure.
Yeah.
That's a perfect example of a typical new client that we get. So their choices basically are that they, in many cases, can leave it in the 401k plan and don't necessarily have to do anything with it. The other choice is that a 401k plan, once you terminate your employment, is what's called a portable plan. So you have the ability to then roll that directly into an IRA. Now, by doing so, you avoid what otherwise would be a 20% mandatory withholding if you took the money personally, and you avoid any penalties and taxes that otherwise might apply. So by putting it straight into that IRA, you retain 100% of your money. Now, they can, again, go to a traditional provider, Schwab, Fidelity, Vanguard, and invest in any of the products that those companies sell. Now, the alternative is they can come to a company like Quest, where we set up the IRA, help them get it funded, and then the ball is in their court. You see, at Quest, we don't actually sell investments. We just set up the IRA, and then the client chooses what they want to put their money into. So they really do have control over their financial future because they're the ones who are picking the product, as opposed to putting it in a mutual fund where the manager then goes out and picks everything, which may not really align with your values. Here, you're picking what you want. You've done the due diligence. You've done the homework. You know the people involved. So in many ways, potentially are a lot less surprised with the outcome because of the work that you've done on the front end to select the investment.
Wow, that's amazing. So if I heard you right, your typical new client, they have this 401k plan. They can choose to, go to a Schwab, Vanguard, Fidelity, and let them continue to invest it. Or Quest will set up the IRA, get it funded, and then the investor has the decision and the ball's in their court on where to put the funds. Did I follow that correctly?
Absolutely. And that's really what self-directed means, because otherwise self-directed is just a marketing term. There's no distinction between the types of IRAs that you would get from one company to the other. That's a common misconception. In fact, I see people get confused on our application all the time. They say, well, I see traditional and I see Roth and all these choices, but I don't see self-directed on there. You never will. Again, self-directed is just a marketing term, and it means that you're buying into that private alternative asset. Other than that, IRA rules are all the same, and IRAs are the same no matter where you go.
Yeah, so you were kind of explaining there. I just want to make sure I follow the difference between a self-directed IRA and a traditional IRA. Can you give it to us one more time? What are the differences, if any?
Sure. So I would argue that every IRA is self-directed in a manner of speaking. I decide what company to set it up with, and I decide, what I'm going to put my money in, or if I'm going to let somebody manage it for me. The distinction is that with a self-directed IRA, the individual really chooses the asset. So there are traditional IRAs, there are Roth IRAs, there are SEP IRAs. No matter where you go, you're going to have the same kind of IRA here. So that's really the bottom line, is that self-directed is just a marketing term, and the IRAs are going to be the same here, there, or anywhere else for that matter.
Okay, so really, at the end of the day, it's just a place for folks who want to be able to choose where to put the funds versus having somebody else put the funds.
Exactly. Or having your options limited by what that company sells.
Okay. Any sort of benefits of a self-directed IRA when you start to invest in real estate or precious metals or oil and gas, any private equity stuff like that? Are there any benefits that our listeners should be aware of?
Well, the one clear-cut benefit is that when you're in this alternative asset space, in many ways, you're dealing with a much more tangible asset. You could invest in the best company that's out there, and that company could still go bankrupt. And at the end of the day, you have nothing left to show for it. Your investment is completely at risk. But if you are using it for real estate, let's say that I am going to buy that house that I'm going to rent. And, what's a worst case scenario there? The house could burn down. However, through my IRA, I can insure that property. I have, at the end of the day, a tangible piece of real estate that if a worst case scenario happens, I still have that. There are those fallbacks in multifamily that properties are insured. And again, with private lending, I can take that lien position. If my borrower flakes out on me and doesn't repay the loan, I can collect that asset. So that is a big distinction when you're dealing in these alternative assets that you don't get through traditional investments.
Yeah, I can relate to that. When I'm thinking about my life of, I had a snowboarding career and I had a SEP IRA. It was run through, I think, Northwestern Mutual or Fidelity. I can't remember exactly at the time. It was fully handled by somebody else. And I remember wanting access to the money because I wanted to invest in something that I could verify and see was real. And I owned, right down the street. So that made a lot of sense to me. And I do remember the returns that I was getting from the folks that were investing. It wasn't close to what I was able to create on my own. So that was another huge piece for me.
Yeah. And, we see that a lot.
So with that, why do you think, we have a stat here, it says only 10% of retirement account holders take advantage of a self-directed IRA. Why do you think it's so few if it's so easy and you can control your own money?
I think it's a matter of fact that just people still are not aware of this. Even though Quest has been around over 20 years, like I said, I still meet people, and when I tell them about it, they're only hearing about it for the first time. And they say to me that they never even knew you could do this before. I have to admit, it was only a short time before I joined Quest that I even knew you could do this kind of thing. For the longest time, I was under the impression you couldn't do real estate in an IRA. And in many ways, I thought it was impractical to try to do real estate in an IRA. But, it is something that's doable. It's something that is done, and it's being done more so for a number of the reasons that we were discussing previously. The fact that the market and traditional assets haven't been performing to the expectations that people are accustomed to. And this is, again, a way that they can really get more diversification. So the way that we're going to start to see that number increase is through providing education, through podcasts like this and every channel that we can imagine out there.
Yeah, and I can attest to that. We have a lot of folks who invest into our multifamily deals through a self-directed IRA. It's, I would say, out of our capital that we raise, 10 to 20%, or even sometimes up to 30% of the folks that are investing in these deals are coming in through a self-directed IRA. So it's real. And, I think the piece that would be really helpful to talk about is how. I want to make sure that it's clear on the steps that take. Let's just say someone's listening and they're like, oh, I'm interested. I'd like to learn more about how to go about doing that. What does the process look like of start to finish from your perspective?
Yeah. And I mean, I think, again, it's a pretty easy process. We try to make it as painless as possible here at Quest. So step number one would be to talk to myself or one of my colleagues here that are IRA specialists. We can help people assess the type of IRA that's going to be right for them and really lay out the process in a very easy to understand manner. So that's step one. Then it's a question of where the funding is going to come from. We've been focusing on rollovers from retirement plans like 401ks or 403bs, but there are other ways that you can get money into an IRA as well. For instance, if you have an existing IRA that you've had for years at Schwab or Fidelity, you can move that money over in any amount. That's not subject to a limitation like a contribution would be. But speaking of contributions, you mentioned a SEP IRA. Well, a SEP IRA you're doing through your business, that actually lets you put in a lot more than $7,000 a year, which is what the max is for 2024. In fact, for 2024, I believe the maximum, it's a lesser of number, but it's the lesser of $69,000 or 25% of your compensation. Again, that's still a lot more in all likelihood than $7,000 a year, and it'll get you into some of these private deals. So that's step number two, is finding out, the type of account and then getting the funding. Once the money's here, then it's just a simple matter of you, again, telling us what you want to put it into. So you do a direction of investment through us. And again, here at Quest, the process would be then you're dealing with one of our specialists in that asset category. That's going to be the person who takes you through the process. They're going to help collect the documents, review them, make sure they're titled properly. That's probably the one key thing that we see a lot, is that people assume they just put their name down, but it has to be titled in the name of the IRA specifically. So once all that's in order, we get the approval of the client, and then the transaction gets funded. And then that's now their investment here through Quest Trust Company.
Got it. So step one is to get in touch with yourself or a colleague at Quest. And at that time, what kind of IRA, you start doing document transferring back and forth, getting it properly titled in your name. That's step one?
That's step one, correct.
Okay. And how long does that generally take, and how much time are clients spending via email or phone call to get that step done?
Typically everything we do here at Quest is done in 24 to 48 hours. We can get an account set up, we can get a transfer moving, make that request to get the money over here. The one part where we don't have control over the process is how fast that company is going to get the money to us. Mm-hmm. I'll tell you, some companies are really good about it, and some companies are less good. That's probably the politest way I can think to say it. They're just not as good. They don't want to give up the money, and sometimes they drag their feet. But once the funds are here, again, the investment process is very quick. And once we get the client's approval on the transaction, we will fund it within 72 hours.
So they get the documents done, all the paperwork gets completed. You now have the paperwork to go to, let's just say, a Fidelity or Charles Schwab, and you submit the paperwork to them, or does the client submit the paperwork to their IRA or to their current holder?
So depends on the transaction. If it's IRA to IRA, then Quest handles that. The provider sends the money to us directly. We are more in charge on that part of the process. If it's that 401k plan, it still is kind of a little old-fashioned process, if you will. We set up the IRA first, then the client goes to the plan provider and directs them to make the distribution. And here again, that's where they're going to make that distribution, not to the client personally, but to the IRA. So then it's payable to the IRA so that 100% of the money comes out. I have seen many cases still where the client actually gets a physical check. These plans sometimes don't send the money directly to us. So if they get the check, then they have to forward the check to us. So typically in the process, if you're doing a direct rollover out of that old 401k plan, it does take a little longer to get everything situated and done and the funds available. But one thing that we do a lot of the time, we can multitask basically. We can get accounts set up, we can get the money in motion. We can also get a transaction started so that we're doing the document collection, the document review, basically we've got everything locked and loaded, and we just wait for the money to catch up.
Got it. Okay. So there's some steps there. And if you're going IRA to IRA, Quest can help get those funds done faster. If it's an IRA to a 401k to an IRA, then the client's going to have to direct the distribution.
Yeah, they are a little more involved in the process, and it does tend to take a little longer. IRA to IRA transfers, sometimes if they're wiring the money to us, I've seen that done within 7 days.
Okay. Gosh, so 7 days, and you made that sound like it was fast. It sounds slow to me still, like, getting your funds from a company. It seems like it could happen within the same day, 24 hours, but it's not that quick. What is the holdup of getting, when you commit and say, we're going to create this self-directed IRA and you want the funds, what is the holdup that happens at Fidelity or Charles Schwab or Vanguard where it takes 2 weeks, like you're making it sound like?
Well, again, I can't really speak to their procedures so much. But a lot of this, again, it is done in ways that might seem old-fashioned. We get the form, and again, it depends on that company, because sometimes they actually will require us to send the original form, and it has to have that wet ink signature on the form. And sometimes these companies will even require a medallion signature guarantee, which is kind of a pain to try to get. But most companies, again, we can just take the form. It still has to have the wet ink signature, but we're allowed to fax it to them. And then it's just a question of how quickly they're going to process it. And I'll tell you part of why, in some cases, this is kind of off topic, but, I think it's also been employment issues that a lot of these companies have had where they just don't have the back office staff that sometimes keeps pace with these requests. So it's really a case of just case by case with these various companies as to how quickly they're going to move.
Yeah, it sounds to me like they don't have the back office staff to move funds out, but they probably have the front office staff to get the funds in the door, which, that's
very typical.
Yeah, that seems interesting. So once the money is there in Quest's hand, then, what to do with the funds, that comes down to the client with the self-directed IRA deciding, I want to put these funds here or there.
That's correct. And It's very typical that people don't just open an account with Quest for the heck of it. They usually open it with an investment in mind. So when they're coming to us, they already have a relationship with you and are ready to go on something that you are offering. So the intent is the money's going to get here and the money's going to get invested in a relatively short amount of time.
Yeah, that's how most of our investors come to Quest is, they've learned about the ability to create a self-directed IRA, or it's new to them from, one of our presentations or something we're doing to educate our investors. And then they'll come to you guys and create the investment or the self-directed IRA. And then as soon as it's done, they fund it pretty much within a couple of days as that's like the goal set up. So I'm glad you added that in there. So what else for the listeners that are here? It sounds pretty darn simple, like get in touch with you guys, 24 to 48 hours of work. There's going to be some paperwork and some back and forth. It may be a little clunky getting the actual funds from the company of which, whether it's Fidelity or IRA, Charles Schwab or Vanguard, any of that stuff. But once it's done and you've got it initially set up and you've got the money, how long once you guys have the money and everything is done does it take to fund the actual investment?
With the process, once we've done the document review, we will send a client an Adobe signed document, which is what we call the read and approved. And once they've done that, within 72 hours, we will get that investment funded pretty quick. The other thing I might add is that this process isn't really that expensive either. I think that's one of the things, and that's one of the great misconceptions of self-directed investing. And it's a myth that's been perpetuated by other types of advisors out there as well, is that this is a very expensive process. At the end of the day, it's not.
Let's talk a little bit more on that. I'm glad you brought that up. Being I knew it wasn't expensive, I didn't even think of it as a topic to share, but I'm sure there are folks that are over there listening thinking, hey, what does this cost for me to do? What is a typical cost-ish that, folks can think about if they're considering this?
Sure. So there are two types of service fees that are going to be charged at Quest. There's transactional and then there's administrative. Transactional are a bunch of one-time fees, like a one-time setup fee of $100. Buying an asset is just $125. And again, that incorporates the document review, that incorporates that 72-hour funding time frame. I might also mention the transaction, especially with an investment like yours, they have what I kind of refer to as a lifespan. There's a beginning, and then in a few years it comes to an end. That's just one transaction. They're only paying that fee at the beginning, but they're not paying it a second time at the end. The only other thing that sometimes you see related to the transaction is how you send the money. And by that, what I mean is if you're wiring money, there is a wire fee of $30 from Quest. You can utilize another source, which is called the Automatic Clearinghouse, ACH. There's no charge sending money that way. So again, it comes down to a lot of the choices that are made on the transaction. Now, the administration is the other side. The administration is us doing the technical things that keep the IRA compliant. So that's tax filings, that's record keeping, things of that nature. And on a single asset, you can pay as little as $350 a year for us to administer it. At the end of the day, it doesn't matter how much that asset is worth. It could be worth $50,000, it could be worth $100,000, $500,000. You would pay only $350 for us to administer that asset. So again, part of the conversation that we have when we talk to clients is we help them navigate that fee schedule so that they can really get the most value from Quest. Believe it or not, we don't necessarily want to see people pay more than they have to. And part of our job is to help them navigate that fee schedule so they understand what they will pay. And again, understand where the value is so that they are getting, again, the most bang for their buck through us.
Yeah. So if I heard you right, about $225 to $250 to get it set up in the transactional side. And then on the administrative side, you're about $350 in annual fees.
Correct. And again, those initial fees are one time only. The transaction fee, again, if you're doing more transactions, you pay that. But one thing that I think also sets Quest apart a little bit is the one fee we don't charge, which is an account closing fee. A lot of other custodians do have such a thing where you kind of get penalized if you decide you want to leave. Here, if you do your first investment and you decide you want to go back to a Schwab or Fidelity, the only thing you might pay us for is if we're wiring money out of Quest. That's it.
That's good to know. So if I'm coming in for the first time and I'm going to create a self-directed IRA, I can plan on spending one time $225 plus potentially a wire fee, or I can ACH it to get around that. And then that one-time setup fee is done, and then the $350 for the administration side, and that $350 a year. If let's say I get into an investment like we offer for 5 years, I'm paying $350 each year for a 5-year period. Okay.
Correct. But again, the way I try to break it down and quantify it sometimes is how much are you investing and how much is $350 relative to that? Because I think we always put it in the context of, what are you charging percent-wise? Well, if it's 75,000, let's say, and I'm looking at $350. I mean, that's a quarter of a basis point, pretty much, that you're paying for us to administer that IRA.
Yeah, I mean, if you're putting in $100,000 into one of our investments, or a typical investment that's giving you about a 15% annualized return, or that's the goal, kind of like a projected minimum. Ideally, you're getting 15 grand of profit, so you take $350 off that. It's still heavily worth it.
Oh, yeah. I mean, if you think about it, it becomes a better value the bigger the account becomes.
Right.
Because that fractional percentage gets smaller and smaller.
Yeah, understood. Good stuff. Okay, let's see here. What else should be talked about? What else would help our listeners, better understand, or what's a great way for them to get in contact with you?
Well, it's very easy to get in touch with us. They can always reach out to us and find more information through our website, which is questtrustcompany.com, which again still will be in operation for the foreseeable future. We have a toll-free number, which is 855-386-4727, which happens to be 855-FUN-IRAs, is kind of the simple way that we were able to get that phone number and get that as a way that people can get a hold of us. They can always ask for me. Again, my name is Steve. I'm the only Steve that works here at Quest. So that's the first time in my career I've ever been at a company and been the only Steve. It's probably a function of my age, I guess. But I'm easy to get a hold of, or they can ask for an IRA specialist. and we can walk them through the entire process.
Okay, great. Well, that's good. So questtrustcompany.com or a toll-free number 855-386-4727. And that was 855-FUN IRAs. Is that what you said? Like fun as in it's fun?
It is fun. Yes, exactly.
Okay. All right.
Fun IRAs.
One other question that just came to my mind is what's the difference between a transfer and a rollover?
So when we think transfer, that's where we're going IRA to IRA. So it's a case of where I've already got an IRA at Fidelity and I want to move it over to Quest. That's where we do the transaction for them. And interestingly, it's something you can do as often as you like, any amount you like, as often. And there's not even tax reporting that's done between the companies to the IRS because it's really never leaving an IRA. Rollover typically refers to when the money is coming out of that qualified retirement plan, like a 401k. The technical term is direct rollover, so it's leaving one plan and it's going into that IRA. Again, if it's titled properly, there is no taxation that's going to occur. Now, the one thing I always prep people on is that you actually do get a 1099-R from the company where the distribution occurs from, but you don't have to worry about that. Because the way it's coded, it won't go into your adjusted gross income. But people, they see that 1099-R and they think something went wrong and now they're going to pay taxes on that money. Part of what we also do for the administration is we also file an offsetting form with the IRS. So once those forms are submitted, it basically cancels each other out.
Okay. Gosh, so I was writing some notes down about taxes that just made my mind jog here. You said an IRA to IRA is a transfer, whereas a rollover is a 401k to an IRA?
That's the case. Yeah, 401k, 403b. There are other kinds of retirement plans that people can have, like an old school defined benefit pension we still see from time to time, or deferred comp plans, which are commonly referred to as 457 plans. You know, all those things that you may have through your employer, whether it's a corporation, whether it's a nonprofit, whether it's a government entity, many of those plans can be directly rolled over into a self-directed IRA.
Okay. Well, maybe I'm gonna ask one other question in regards to taxes, and I want to hear, when will you likely have an effect or a negative effect for taxes with a self-directed IRA? What's the time when our investors need to be, hey, this is something you need to be aware of, this is part of, I mean, taxes are part of everything in the world, right? You're not getting around taxes very easily. When will you have some tax penalty through a sale? At what point do you get hit with taxes?
Well, the nice thing about the IRA is, like that 401k, everything is tax deferred in there. So with these types of assets, basically your profit comes back, everything remains tax deferred. So there is no capital gain that you have to account for. There's no need even to do something like a 1031 exchange within an IRA, because again, everything is always tax deferred. The only thing you have to worry about is the tax treatment when the money comes out. And again, that depends on the type of IRA that we're talking about here. Now, if it's a traditional IRA, and let's say it was funded with a 401k where all that money came out pre-tax. I put pre-tax money in that 401k, now I'm moving it to the IRA, everything remains tax deferred, but ultimately there's a tax bill that's going to be due. Now, when I'm in retirement, I can take out only that which I need to live off of. So I can control the rate of distribution, which means I can, in essence, control what my tax rate will be in retirement. Now, of course, it's going to vary based on how much I'm taking and what the tax rates are at that point in time. So conceivably in the future, if taxes do go up, I may be paying more, even if I'm taking the same amount of money that I live off of today. The reason I just mentioned that, I want to correlate it to another type of IRA that's out there, which is what's called the Roth IRA. Roth IRA is one of the most advantageous things that has ever been developed by the government. The Roth IRA is completely funded with after-tax dollars. So that's money I am paying taxes on today. Once it goes into that Roth, it is tax deferred. So everything I mentioned before stays the same. That profit you mentioned, however much it is, year after year, I'm getting it into that IRA and it's accumulating tax deferred. Now, if it comes out as qualified distributions from that Roth, which basically means that it's been in there for at least 5 years, and they're over 59 and a half years old, everything that comes out is tax-free. Now, they've already paid taxes on that which they've contributed, so it's logical they're going to get that back tax-free. But those earnings over time can far exceed what they put in by way of contribution. You talked about the great returns you can get on your investments there, Dan. Imagine getting all of that in the future tax-free.
Wow. Yeah, so there was a lot there, you guys, and if you need to go back and re-listen, that's why it's recorded if you have questions there. The Roth IRA, you pay taxes today, and so you have the deferment of taxes as you continue to roll them over from deal to deal to deal. And as long as you've had it in there for 5 years and you're over 59 years old, when you pull the funds out, it's also tax-free.
It is completely tax-free. Right.
Wow. So you can make these gains, keep the funds in there, and roll it and never pay tax on it.
That's correct. What's even better is there are a couple of reasons you can take it out tax-free. We always have to meet what we call that 5-year holding period. But another one of the tax-free conditions is the death of the owner. Now, that may not sound good to you if you're the IRA owner because it means you died. But what it means to your beneficiaries is they can inherit that money tax-free as well. So not only is the Roth a great tool from the standpoint of funding a retirement now, it's also a great estate planning tool because it's another way in which I can pass money now to the next generation and not have them pay tax on it.
Wow, that's amazing. So let's talk a little bit about depreciation. Is there any ability to have any sort of depreciation in a self-directed IRA when you're investing in these private investments?
Typically, no. The IRS isn't going to let you double dip. They're already giving you an advantage on all that deferral, so they're not going to let you then come in and use the depreciation as well. The government is many things, I tell people, but stupid isn't one of them. They're not going to allow the double dip.
That makes sense. So basically, because you're having these tax-free benefits inside it, the depreciation will not be allowed.
Correct.
Okay, good stuff. Well, I'm glad we touched on the tax side here and we got into some detail for our listeners. And you guys, again, if there's too much content, it came too quick, go back and re-listen. The one question that came up in my mind is, when clients come to you, Steve, and they want to open a self-directed IRA, can the self-directed IRA be a Roth IRA?
It certainly can be. Not only that, what they are allowed to do is, let's say that they just have that traditional money, that 401k where everything was tax deferred, and they bring it over to us. They are actually allowed to do something which is called a Roth conversion. They can take a portion of that traditional money, that pre-tax money, and move it over to a Roth. Now, they will pay taxes on the money that they convert. Again, the IRS isn't going to give them a total free ride. They want their taxation on that money that has not seen any taxation. But once it hits that Roth, now you're off and running. That money, again, once it's in there for that 5-year period, it and everything it accumulates, once you hit 59 and a half, it's going to all be tax-free. And again, we're seeing a lot of clients do that these days. And
Wow.
Another thing, too, that they can do is, it's not uncommon that sometimes I've seen deals where maybe an asset depreciates in year one. They can convert the asset. Once it's dropped in value, they therefore pay less tax. And if you think about it, the investment's going to go back up. Now, what you didn't pay taxes on, potentially you're going to get back tax-free altogether, in addition to what it grows to from its original investment point.
When you say convert the asset right there, what do you mean convert what asset?
So let's say that they've come over and they've purchased XYZ project from Granite Capital, and they put in $100,000.
Mm-hmm.
So they did that with the cash. They bought that asset with the cash. Now, in year one, again, let's just say that you take advantage of all the depreciations and the asset shows a lower value in that first year. Mm-hmm. So the value went from 100,000 to 70,000 in that first year. Well, what they can do is then take that asset and move it from the traditional over into the Roth. It doesn't have to just be cash that they move. And again, this is a very common strategy that I'm seeing a lot of clients employ. Take advantage of that year one decline, pay less tax, and then move forward from that point under the Roth, where everything now, that goes up is tax-free. What I would tell clients, though, is always consult with a CPA before you're going to do any of these things. At Quest, we don't offer tax, legal, or investment advice. So if you're ever engaging in something like that, you always want to consult with a tax advisor first.
Yeah, that's a great point, Steve. I'm glad you mentioned that. You know, what we're talking about here, ladies and gentlemen, there's a little bit more of a team mentality. Your CPA is giving you some feedback and some advice on how you can best set yourself up for retirement. You use Quest as your team to get it set up properly. You'd be investing potentially, you know, in real assets with someone like us as your team to be picking the best assets and managing them for you. And it's a little bit more hands-on, I would say, but the potential for gain can be far from what I saw during my life and in my career as a SEP IRA investor. All right. Well, gosh, you guys, in conclusion, we're going to wrap this up today. Steve, we just want to thank you so much for coming on the show. One more time, if our listeners want to get a hold of you, what's the best way for them to get a hold of you?
I would say the best way to get a hold of us is going to be that toll-free number that we mentioned, 855-FUN-IRAs. Again, ask for Steve, ask for an IRA specialist. If I'm not available, we're all qualified to be of help. We love working with you guys, your clients, Dan, in particular. They are educated clients, and educated clients are the best clients to work with.
That's it for today's episode. Thank you for tuning in to another episode of Keeping It Real Estate. We hope you enjoyed it. If so, please share and leave us a rating. If you are not already subscribed, we encourage you to subscribe to our newsletter by going to granitetowersequitygroup.com/invest. And again, thank you for tuning in. Keep listening to our show so you can become the best real estate investor possible. Thanks for coming on.